Hi, and welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management. And thanks for joining us here for our weekly Mike on Money, talking about everything in the markets. And today we're going to talk about stagflation and reflation, just kind of what's going on with the whole inflationary market. We touched on it a bit last week. I'm going to take a bit deeper dive into what that means for the portfolios and what it means for the general economy for the foreseeable future anyway. But before we get started with all that, of course, as always, keep in mind everything we talk about here is for educational purposes only. Always seek the advice of a professional. Do your own due diligence before applying any strategies you see here or anywhere to your personal portfolios to make sure that they're appropriate for you. If you have any questions about your specific situation, as always, come visit us at mikeonmoney.com. You can find our other educational material there, or visit our videos. You can give us a call, or contact information's there, or even book an appointment directly with us. If you're watching live today, of course, you can always click in there, put in your questions, and we'll try to get to them before the end of today's show. If we can't, we will always follow up with you on any questions you might have. Of course, if you're watching the recorded version on YouTube or the podcast, by all means, just go to, as I mentioned before, go to mikeonmoney.com. You can send in your questions there or contact us. We're happy to help you out. So before we jump in, we always talk a little bit about the COVID-19 update. Obviously, it's ongoing. Yesterday, the White House, has continued to restrict traveling for Canada for another month. So you can still fly down there, of course, with your appropriate testing and vaccinations, but the border, the driving over the border is still closed for Canadians headed south. We don't know when that's going to change, but more and more of the world is starting to open up a bit with the vaccinations. Of course, every country has their own restrictions, so double check if you're thinking of traveling. The latest number is that Canadians are traveling, especially to the sun destinations. So double check what the requirements are for the country that you're going to. I know I've had this long commitment to go to Mexico before the end of the year, and I don't know if that's going to happen or not. Continuing to watch those requirements and also watch the numbers to see how things are progressing. Good news for Canadians, the AstraZeneca vaccine, the EU Commission is kind of changed their view on the AstraZeneca. Originally, they were looking at not allowing AstraZeneca, those who have the AstraZeneca vaccine, to qualify as vaccinated in the EU. The UK, of course, had approved it, but not the EU Commission. Because AstraZeneca was developed in a few different areas, and the Canadian vaccine was not developed or produced rather in the UK. So AstraZeneca, people who had the double AstraZeneca shots were not approved to travel to the EU. So good news on that front, especially for me who has the double AstraZeneca, that the EU is open. The US still hasn't recognized it, but I'm in no hurry to go there these days. So at least the EU is open, so maybe 2022 I can get over there. One thing on that note, as far as I've seen, nowhere outside of Canada has really approved the mixed shots yet. So I know Canada was one of the first, and I think one of the very few who approved AstraZeneca mixed with an mRNA vaccine like Pfizer or Moderna. And there's still a lot of testing happening on that to see if other countries are going to accept that as considered fully vaccinated. So again, if you're thinking of traveling, just look into what the requirements of the area you're going to and make sure you double check. And of course, here in BC, as of Monday, 86% of those aged 12 and older have received their first dose of vaccine, and 79% their second dose. So continuing on to set a pretty good trend for Canada and the world as far as the percentage of vaccinated within the province. So let's talk about the economy and what's going on. Before I jump into that, last week, of course, we talked about the inflation numbers that we were expecting. And we did see them. And of course, there was a big jump in it. And again, last week we talked a lot about that transitory inflation numbers being, we were expecting a big number. We're expecting it to level off as the supply chain kind of catches up with demand out there. So not a big concern as far as our outlook on the markets go. But just to review that, we expected that number to be higher last week, and it certainly was. This week, we're looking at the housing starts to come out for August. I saw some early numbers starting to come out. They are higher, which is pretty much the expectation we're looking for. This morning, we saw stock futures, and certainly the markets rise higher after a difficult day in the markets yesterday. Most of that yesterday was pretty much just based on the Chinese property sector, kind of fueling this global sell-off on stocks and commodities, and we'll talk a little bit more. Basically, a large real estate firm kind of collapsing the Evergrande group, going into default, kind of being compared to the Lehman Brothers of 2008, although not really. Lehman Brothers was a kind of a precursor to a bigger financial crisis, not just in the US, but globally, or the US started, which brought the globe down because of the intertwined financing that we saw through the housing boom in the United States. This is very different, much more contained to China. Obviously not good for their markets over there, or there's still some big concerns over with China. But that being said, not as big a concern over here. So we did see kind of that hangover yesterday, but today things looking a bit better with a rebound in the markets. We also saw Hong Kong's flagship index, fall about 1.3%, but then bounce back about half that, kind of right away the next day. Just coming off again, that initial shock of what happened with Evergrande group in China. The Fed officials are set to gather to discuss monetary policy. There's really going to be scrutinized. So this goes back to last week. We talked a lot about kind of where interest rates are going to go, but also when are they going to go? And obviously, the move that everyone's looking at is for them to go up. So is it going to happen in early 2022 or 2023 or later? The Fed officials are getting together to have a detailed discussion about their plan, about the tightening, the course of action they're going to take towards tightening, and when they think that they have to start doing that. And there is that back and forth right now. As I mentioned last week, the general consensus of the market is early 22, and that was my general consensus earlier this year, well ahead of the market. But now I actually think this early inflation, supply chain inflation, is actually taking longer to work its way through than originally thought. So I do think that flattening of inflation is going to allow interest rates to stay lower a little bit longer. So we'll keep a very close eye on that. Obviously, a high-stake Christmas is looming here. The supply chain has affected everything, as we've talked about. Surge in toy demand has already started out there as supply chain is snarling up. There's big shortages. I'm kind of happy to be out of that stage. Having 2 kids off at university, we've moved away from certainly the toy stage. My children, all they tend to ask for these days is cash. So I'm glad I'm not in this, but obviously there's a big demand around kind of the popular toys, scooters, video games, all trying to get them delivered for Christmas. So if you haven't started your Christmas shopping, or if you're one of those people like me who want more of a last minute shopper, do expect there to be a lot of shortages, probably of everything. I don't think this is going to be focused on toys. Obviously that's a big area because disappointment for kids is the worst. But I would definitely get out there or start getting your orders in sooner than later if there's one of those must-have presents that you're looking for Christmas, because that supply chain problem is still out there, and it's not going to improve definitely before the end of this year. BP is making a gamble, kind of a very fast transition, moving to more renewable resources, renewable energies. This is not a surprise. There was a big battle with the board of directors earlier this year with BP, kind of on the approach to taste that they're taking here. They're just moving on more lucrative projects where they're seeing more cash flow coming in or more financing flow coming in that allows them to invest in some of those renewable technologies and away from the fossil fuels, which has been their mainstay for years. Higher taxes are coming for the markets, but that should be a good thing. We've seen in the US, we talked a lot about last week, and of course, if you follow any of the news in the US, the Biden government down there is certainly moving to tax the wealthier people, but also the corporations, undoing some of the Trump era tax cuts for corporations, moving more taxes in for the ultra wealthy for sure, and a lot of talks around the estate tax. So that's something we'll have to watch, especially for those people in Canada who are considered US persons. So really keep an eye on this if you're considered a US person. So obviously a US person is a US citizen who's living here in Canada. Doesn't matter how long you've lived here. I've had clients who moved here when they were 2 years old, never worked in the US, never had anything to do with the US other than they retained their US citizenship, are still caught up in this, especially when we're talking about estate taxation, because as a US person, you can get caught up into that. A US person can also be someone who earns money in the US. So if you have a job or if you have a rental property in the US, you can be considered a US person. And if you own property in the US, certainly your state can get caught up in that. Having US resident properties, you can kind of get trapped into the US person category. So definitely we'll have to keep an eye on that. That's a bigger one for Canadians. But as far as the taxation, I think the whole world is more than happy to see the US start to pay their, I guess, fair share would be a way to put it, of global taxes, given it's one of the wealthiest countries in the world, but has one of the lowest tax rates in the world as well. Also, we're out there seeing the Fed is to reveal new projections for investors as far as the rate liftoff and the timing, as I talked about. This is their big meeting. All eyes are going to be on this Wednesday. They're having the policy meeting. And it's not going to be the straight answer. We never get a straight answer. A lot of it's going to be about the language, whether it's concern language or whether they're in a comfortable spot as far as inflation goes. So we'll take a very close look at that. And of course, we'll talk about it more next week. Home builders confidence is edging up for September. As I mentioned, the housing starts did increase a little bit, or the early numbers are looking like they're increasing. And this was mostly elevated by some of those costs that we've seen kind of inflate. Wood being a massive one, starting to ease a little bit, which is great for everybody who wants to do home renovations or home improvements or new builds. It was getting really crazy here through the summer, and in the US, of course, a lot of the software, especially coming from Canada, those are starting to ease off. They're still not at kind of pre-pandemic numbers, but they're starting to ease off a little bit, which is good to see. Global active equity funds see inflows, the highest inflows in about 7 years. So this is also kind of going to that theme we talked about last week, is in this inflationary, this middle ground of inflation, where are we putting our money? Where are the key areas to have the portfolios positioned? And we talked about last week, decreasing a little bit of US, again, not getting out of the US, but decreasing a bit of the US and focusing more on that global market, looking more at the EU to start show some higher growth numbers, even the UK, although still struggling a little bit after Brexit. But higher growth likely in the coming 6 months than necessarily the U.S. general market. There's still going to be sectors and pockets in the U.S. that will excel, but overall, generally, we're looking at the global markets over U.S. Not to stop the IPO train even through this inflationary market. We have seen a big slowdown from the first half of the year, but we continue to see names coming out there. Restaurant software provider Toast is out seeking $18 billion valuation on their IPO, which is a bold number to go after. it's obviously part of this record boom in the capital markets for this year. But given, the number of restaurants that have closed their doors or have struggled through the pandemic, as far as their sales numbers, certainly could improve going forward, but it's a pretty generous valuation. So let's take a look at the US specifically. As I mentioned, they've got their 2-day policy meeting coming up here Wednesday. We'll look at that. US Commerce Department is scheduled to report the country's current account deficit. So this is the trade deficit. We're looking for it to narrow a little bit. It's been the trend, mostly around the housing start data will drive part of that. So no big surprise coming there. We're also seeing the FDA in the US looking to approve or come out with a decision on Insight Corp's. It's a new treatment for eczema. So it's a bit of a breakthrough for treating, especially with adolescents and also adults, to help them fight that common, which can be fairly uncomfortable and not really a great treatment out there as to date. Pfizer and BioNTech, their data has been completed to protect kids. So they're looking for approval for age 5 to 11. Obviously, they would have preferred to have this in the summer if they could have got the tests and testing out and gone for approval earlier before school started. But as it is, I think most parents, the vaccine world is quite divided. So we'll see how things go. But they're now looking for approval for ages 5 to 11 to protect that group from COVID, which, from a timing perspective, it can't be better because that's where we're seeing a big spike in the infection rate. Obviously, their immune system are stronger than us older people. But at the same time, it's also very sad when they get long COVID or severe, and while the mortality rate might be lower for them, obviously it's very sad to see children be negatively affected in any way by this virus. Didi co-founder Liu. So Didi, if you're not familiar, is a kind of the ride hailing or Uber in China. They've recently filed for listing on the New York Stock Exchange, which is putting them under more scrutiny. So their co-founder and president has decided to step down just under that closer scrutiny. Not a lot more information around that, but not yet anyway. I'm sure we'll hear more as it rolls out. But that's been the big challenge between the US and China, in either country listing on the other exchange or trying to get investors from the other side. Obviously, a lot more scrutiny coming from those two countries around any business cross-border. States are rallying around a proposed law to rein in big tech. So we've talked about this in the past. The US state attorneys are kind of rallying around this antitrust laws for big tech companies like Facebook and Alphabet's Google. It's definitely, in some cases, are warranted. Obviously, the concern here is the big tech companies are so large, anytime that there's any real competition, they can just gobble them up or force them out. So they're trying to put antitrust laws in there to protect from that. We've seen this in the past when big tech companies, especially in the tech industry, have gotten very large. Microsoft in the past has been forced to sell off, pieces of their firm to be less kind of integrated to their clients. Where the PC manufacturing used to come with Explorer, which is now Edge. Their web browser kind of built in. They were forced to separate that. They sold off their PC manufacturing division, to Lenovo, which Lenovo then got sold off again. Anyway, they got broken back up, and then of course over time Microsoft started buying other companies and kind of becoming this big conglomerate again, with everything kind of in-house, and we're seeing that even on bigger scales with Amazon, Google, Facebook, Apple, Microsoft. So this antitrust law, which the feds started talking about, and now all the states are getting around, is to really force more competition into those markets. We'll probably see some breakups of some of these larger companies selling off different portions or different subsidiaries of theirs, you know, and then over time, very likely them buying up new subsidiaries and becoming big again. It's kind of a cycle we go through. Twitter is seeking to settle a 2016 class action lawsuit for $800 million. This has $800 million. This had to do with their shareholder, you know, rollout, their IPO, you know, where they're being accused of deceiving investors kind of about how often people use the Twitter platform. And there's a class action lawsuit there for about $800 million. Likely this settlement will go through and they'll put it behind them. And as most class action lawsuits, very little money will get to the shareholders. Most of it will go to lawyers and they'll move on. CVS is looking to hire 25,000 new people ahead of the flu season. Obviously, there's a job shortage everywhere in the world, trying to get qualified people. So they're trying to get ahead of the flu season. They're trying to hire 25,000 people across the country to be able to administer the flu shots. Remember those? Remember when we used to get flu shots once a year? Well, this year, I guess we're expecting to have them again. So they're looking to hire 25,000 people just to get, help people get the flu shots, get caught up on that. So you might be double vaxxed for COVID, but don't forget to go get your flu shots or any other vaccines that that you're due for, because I think through the last year and a half, 2 years, we've completely forgot about those. Of course, last year's flu season was very limited due to the mask wearing. But as we slowly come out of that, we're probably going to see that resurgence of the flu season again. So, especially if you're a high risk, but even if you're not, the same principles apply. You know, it's funny. I want to say 10 years ago, 5 years ago, time's lost all meaning these days for me. But I remember I didn't used to get the flu shot because I've never actually, knock on wood, I've never actually had the flu. So so I wasn't getting the shot, but then someone pointed out to me, well, I could just be a carrier and giving it to people who are susceptible to the flu or at risk of the flu. So now I try to get my flu shot every year, except for last year. But those of you out there, you know, definitely go out and catch up on that this year, because I think all predictions are it's going to be a real flu season this year. Coming up in Canada, we have the new, Canada's going to release the new home prices for August. We're likely to see that increase a little bit over July and June, as we've seen a bit of increase. Not a ton though, it seems to be leveling off a little bit here in Canada, which is probably good news for a lot of people. We've actually seen some pockets start to decrease a little bit, certainly condos in downtown Vancouver and a little bit in Toronto. And we don't have a lot of data around that yet. But I suspect that is being driven by the work at home movement. So less and less people, especially in the younger group, buying or being forced to rent in the more dense downtown areas, and can buy. You know, I've seen even through my own contacts, I've seen a lot of younger people buying their first homes in Squamish or Chilliwack, or areas that they consider more close to their lifestyle, you know, whether they be outdoors or they just want a yard, versus buying the downtown condo, mainly because their money carries more weight there, and they don't have to be in the office 100% of the time anymore. So that might be driving a little bit of that pocket. But we're looking to see more data, hopefully come out here shortly for August as well, just to give us a bit more insight into what that's going to look like. Canadian home prices, you know, climb, as I mentioned, but at a slower pace. And of course, we had an election yesterday. You might not have realized it. If you did get out on the vote, happy to say nothing much changed. So, well, happy to say. Not happy to say that there was $600 million spent on an election. I think that's the biggest concern people had about this whole thing. And pretty much it's status quo with the Liberals having the minority government. I think, well, obviously the Liberals were hoping to, you know, grab a majority government. I think in the end, they're pretty happy to maintain the minority, because at the end there, or as it built up to yesterday, there was a lot of concern for the Liberal side that the Conservatives might steal it from them. Obviously that didn't happen, but anyway, status quo for Canada. We didn't cover too much about the election last week, mainly because Canadian elections don't have huge impacts on the markets. I'm sorry to say. We just don't have that much sway in the global scene, and especially between the two major parties that we have here. There's some fiscal differences, but not a ton when it comes to kind of our position in the global marketplace. So as it is, everything stays the same, and we move on. As far as the dollar, we saw it edge a little bit lower here today after a bit of a bump up yesterday. Remember, markets go down, US dollar goes up, markets go up, US dollar goes down. So again, we're looking for steady markets, so probably a trend down on the US dollar as things move along. On the commodity front, oil continues to hold strong. It broke through $72 a barrel last week. Came back down, still above 71, I think around 71.60, I think last I looked. So producers are looking to increase supply as demand continues to increase with the global reopening. Gold ticked a bit higher, obviously, a bit on the higher inflation numbers, but also on the weaker US dollar, so that'll continue. And copper bounced back a little bit. Remember last week it dropped a tiny bit, back up that 1.5%. Again, still holding in strong as far as copper valuations go. So let's talk about reflation and stagflation. So stagflation, just as way of definition, reflation is high, rise in inflation rates or recovering where we were before after seeing a deflation or stagflationary period. Stagflation is simply inflation going up and down. So as I mentioned last week, we're pretty much in this transitory stagflation where inflation is going to go up and then come down a bit. And that's mostly, as I said, driven by the reopening demand and that supply chain squeeze. So we're definitely in that period. But what we're looking at now is that reflation period, when we start to see the interest rates start to rise again, fiscal policies start to tighten, and how much can the economy absorb of higher interest rates before it starts to really slow it down. So if the continued theme of the reopening trade, so basically the economy is going to continue to open or continue to grow as we reopen here, we should be able to absorb more interest rates or higher interest rates to slow that inflation down, because we're still quite a bit lower to pre-pandemic levels, and pre-pandemic we were in a growth market. So we should be able to get back to those numbers again. Remember, mortgages were almost 4% back then, and now there's around 2%. So, there's still a bit of ways to go, assuming we continue to see that reopening growth. So we'll keep a close eye on that. How will things perform? And this goes to our theme for this whole year. Large cap liquid companies with quality balance sheets is what we're looking at. Small cap has seen a pretty good start to the year. As again, you should always be diversified in both. But we should see the small cap as a general sector. Again, that's not all names. Small cap slowing a bit as we see that reflation start to become a theme. The Eurozone growth and inflation are both set up for acceleration in the back half of 2021, and that's a global theme. Short China, so this has nothing to do with Evergrande's bankruptcy. This has to do with just the overall lower growth rates that they're seeing, so we're not big on exposures to the Chinese market right now. So obviously underweight in that area. And industrials, I've mentioned before, industrials in a reflation market signal a bullish trend. Definitely something you want to have in your portfolios, and slightly overweight. Energy, again, it's a given primacy that within inflationary markets, energy tends to go up. It's priced to the US dollar, so inflation helps it. High quality fixed income only, really staying away from the high yield. Inflation means higher cost of borrowing for smaller companies, so those high yield, lower grade bonds, become a concern in the portfolios. So in our portfolios, in the fixed income side, we definitely take a tactical approach. Stagflation is great for tactical approach, and if you've looked at our tactical position in there, it's performed almost 9%, I think, year to date. And for a fixed income position, that's great. and that stagflation can, continue to perform well for tactical approach. And then as we go into reflation, again, we'll protect away from some of those high yields. And also, U.S. short-term dollar, we are looking for it to devalue a little bit during that stagflation and reflation. So, keep that in mind, and any U.S. holdings are going to affect your portfolio if you paid with U.S. currency. So that's all we have for this week. It's a nice, quick summary for you guys, what's going on out there. Remember, next week we will be back. I'm trying to get out a deep dive video later this week as well. Always join us at mikeonmoney.com if you have any questions. And you can click through to our YouTube page if you miss any of our live videos, or you can also click through to your preferred podcast providers, Spotify or Apple, iTunes, and subscribe so that you get notifications every time we put out a video. With that, if you have any questions that you want us to cover on these, by all means, let us know. Give us any feedback. Can't wait to talk to you guys again soon. Thanks very much. Take care.